Boom! What's going on, guys? Energy News Beat, episode number 156 here on this gorgeous Tuesday, November 10th, 2020. I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined as always by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, and we got a show to go.
Yeah, we have a pretty good show for you guys lined up today. Couple things here. I mean, stock markets are in an absolutely odd rotation. We'll kind of cover what's happening there with tech stocks being down while the S&P 500 actually sort of gains a little bit in that Dow Jones on the upside. On the energy side, we've got a couple earnings to cover. Oxy comes out, loses a little bit. CRL, Continental Resources issues, pays off short-term debt with longer-term debt. Ring's got some interesting stuff on top of earnings. And Western Energy, woohoo, have itself today. Stu has some stuff in the international news. But first, guys, just subscribe to this YouTube channel, Oil and Gas 360/Enercom, the best way to stay up to date on all of your energy market stuff. If I was one of those crazy millennial YouTubers, I would say smash that like button, but I will refrain from doing that. When we move over to the equities markets, as I mentioned, odd rotation that's happening today. Nasdaq down over 1.75 percentage points, with Dow Jones up 8.8 percentage points, and SPY finishing very flat. Part of the reason is just due to some of the incoming both administration changes and this outlook with the coronavirus vaccine. Things that, industries that would benefit from the economy opening. Exxon Mobil, Chevron, they were both up 2 percentage points today. But to give you an idea, Apple, on the day that they released the new Mac Mini, usually those type of drops rise their stock. They're down 2.6 percentage points. Amazon was down 2.9. Zoom down 18 percentage points over the past 2 days, specifically 5% today. Just combating some of the stuff. So it's just unbelievable the rotations that are happening, specifically in Nasdaq. As I mentioned, Dow Jones are the top 30 capitalized companies. They're up 0.75 percentage point. On the crude oil side, this vaccine has been just wildly bullish news for the market. We're up another 2.75 percentage points, say 41.40. That's a great number to see. 43.20 for the back end of the curve. That's up a percentage point. But I mean, holy smokes, the sentiment around the traders are loving the fact that one, there could be a COVID-19 vaccine that could begin to get widely distributed come Q1 2021, but also the fact that a Biden presidency might bring higher oil prices. We had the Vitol CEO, who's the largest oil and gas trading house, they come up and say they expect to see oil prices high 40s to mid 50s, and that curve really flattening over the next 6 months due to the fact that some of these long-term supply changes might change under a Biden administration. So that's, if you're talking about oil prices, that's a bullish sign right there. Love it when those two houses get in and say they expect oil prices to stay flat, in their earnings, not in their earnings call, but Vicky Hall, who's the CEO of Oxy, actually presented at a conference this afternoon. She actually mentioned that the transition, her quote was, the transition from the Trump administration that has been very good, very supportive of the oil industry, and Mr. Biden, who will become president in January, I think it's going to be one that will surprise people. So she's actually thinking, Oxy's seeing a smooth transition, and I think that's what the sentiment is moving forward, but we'll continue to follow that sentiment on a day-to-day basis. When we look at some of our, natural gas, they're up 3.9 percentage points, really off the back of just some wildly some of those short-term weather patterns changing a little bit. Supposed to be a little cooler throughout the Midwest today. We actually got some snow here in Colorado last night. Did heat up a little bit today, but that's part of the reason why you see natural gas up 2.95 percentage points. Hurricane ETA is also in today. We're expecting to see some of the shutdowns from there, mostly on the natural gas side. When we move over into the back end of the curve, 0.8 percentage points, it's just $3.01 flat. XOP was up 48, up to 48.32. That's about 2.5 percentage points on the upside. So as crude oil moves up, so will that XOP contract. Oilfield services stay fairly flat, though, about 0.75 percentage point on the downside, 118.73. When we move over to some of our biggest movers on the downside, High Point Resources, off the back of a restructuring agreement with Bonanza Creek, they're down 8 percentage points. Sundance Energy down 8.5 percentage points. Peabody Energy Corporation, they were down 24 percentage points, Stu. Pretty unbelievable when you look at the fact that they're one of the biggest coal producers. Obviously, the new Biden administration isn't going to be isn't going to be necessarily as friendly towards the coal industry. So I think you're going to continue to see BTC move down. Before we dive into the international news desk, guys, this show is powered by Data Gumbo, an award-winning technology company with customers all around the world who help build, manage, and automate their own smart contracts. Data Gumbo offers these smart contracts as a new approach to these commercial relations, one that reduces friction, streamlines operations, increases transactional certainty, and cost savings. Every transaction is accurate, certain, touchless, automated, and powered by Gumbo Met. What else more could you want, guys? This company is a massively interconnected blockchain network, and they're led by an insanely awesome team led by Andrew Bruce. Guys, check everything out. Data Gumbo, www.datagumbo.com. Stu, what's on the international news desk?
Hey, I got a full lineup here. First off, coming around the corner, Tullow completes $575 million sale of Uganda assets to Total. Here's the little nugget on this article. And the reason is they've sold it for $575 million. They still owe $2.4 billion. So they probably sold that to make payroll. I am really sorry to see them leave Uganda after 16 years, but oops. Okay, going right on to the next. North Sea majors, they file for CO2 storage license as part of the UK's net zero journey. If you can see, here's our oil and gas 360 map. There's a lot of pipeline and a lot of CO2 that they're going to pump underneath the ocean where they pulled the oil from. I think it's kind of interesting, but I also want to follow the money. So we're just letting our readers know we're going to be following the money on how that goes. All right, here we go. Coming around the corner here, we've got special report. Phantom buyers out of Russia. Are you sitting down?
I am sitting down.
Okay. Mexico, a tanker called the Otman docked at the Jose oil terminal on Venezuela's coast in the Caribbean to unload 1.82 million barrels of heavy crude.
Okay. Smokes.
Yeah, guess what? Yet no tanker with that name is registered in any of the major shipping databases. Oh, that unique identifier is listed in the documents used by the Maritime Organization to identify a ship, was assigned to another tanker called the Rubini, and the Rubini is now broken in half in Turkey. So now, Venezuela, here's where I'm going to get a little bit into the Otman is one of 30 tankers hired by a group known as companies that have connections all around the world. They are related to a group out of Russia. That group is also related to a very high individual in Venezuela, and then they're related to a very high-end folks in Turkey. So they are all, and Iran, all of this crude outside of OPEC is driving people nuts. So when you say that it's going to be Biden administration is going to be good for oil, I'm going to throw this and say OPEC can't control oil. What makes us think that the United States president can control oil price? I
don't think Biden can control oil prices. I just think he's going to enact regulations that, when you look at the history of the type of regulations that I think he'll enact, have generally been very bullish for oil prices. But who knows, Stu? You're right. The supply side has to be changed. And I, for one, am shocked that Russia and Iran and Venezuela are all working outside the law.
And Turkey.
Who would have guessed that they're acting outside the law? You're right. I needed to be sitting down for that one.
Oh, yeah. And I got documentation, baby. I got documentation. And then the last story is BP and Ørsted. We've had a lot of people from Oslo, Norway hitting our site today. A shout out to our folks, brethren in Oslo.
Stay warm.
No, got to stay warm. This is really a cool deal where currently they're making gray hydrogen, which is hydrogen that's being produced by natural gas. They are going to a true green hydrogen. And this plant is really something that we're going to take a look at over time as it comes through. We're going to follow the money on BP because this is BP's long-term strategy. Follow the money. Let's see if it gets some good stuff out there. But that's on the news desk. Anyway, back to you, Michael.
Yeah, again, just completely shocked they're working outside of the law. I would have never seen that coming from just what I would say is three just upstanding countries when it comes to just what they say. On the shale side, we've got some earnings to get to, but as I mentioned, a couple things. One, we've got the Vittel CEO out there saying they see high 40s, low 50s in the next 6 months as crude stocks begin to fall. That's where me and him slightly disagree again. I think global oil stocks are at such an all-time high right now. I'm interested to see how much they'll actually draw in the winter. I know we'll have some natural gas draw, but we'll be following that very closely. But if he's right on that prediction, then yes, we will see $50 oil. If that prediction is wrong and we hold steady with these global oil stocks at all-time highs, I don't see us climbing to that. So, as we swing, we swing with the vaccine news. We'll also swing with some of this news. The other thing, let me see here. Let's just go ahead and dive into the earnings here, okay? On the upside, Western Energy Partners, if you're following the midstream space, holy smokes, it has never been more profitable to own physical infrastructure, specifically midstream pipelines. Q3 earnings for Western Midstream, they totaled, give you guys an idea, net income totaled $240 million for Q3 2020. That led to a $2.16 increase on their stock, or over a quarter, or over basically 25 percentage points, up to 11.25. The street really, really like that. They're also able to sell cash flow. They are able to sell a Fort Lewis operation. They also had $339 million of cash flow from operating activities, which is absolutely an unbelievable number, and that's what we look at true free cash flow. From it's a non-GAAP number, but when you strip out some of the other things that a lot of people tend to leave in free cash flow, they actually do make much. I mean, not only do the street love it, let's buy some pipelines, Stu. I'm telling you, anybody who wants to sell me a pipeline for only a 1 to 2 times premium, I am buying. Speaking of Occidentals, we mentioned that their CEO, Vicky Holub, actually think the transition from a Trump to a Biden administration will go well for oil prices. Unfortunately, they didn't have a great earnings day today. Net loss came at about, not good, $3.8 billion, or about $4 per diluted share, or about an adjusted net loss to the common shareholders of about $738 million. Yeah, I mean, of course, they're paying down debt. I mean, you're going to expect these big losses with oil prices this low, and the fact that they have all this debt that's maturing right now. I mean, when you have to pay $800 million a quarter to repay debt in preferred shares to Warren Buffett, that's not good. You remember they went ahead and paid his last $800 million in cash. So, I mean, you got to talk about if you don't need Buffett, it's only a $3 billion loss. You probably brought, some of these are from write-downs. We're diving into the numbers here. I mean, I don't know what to tell you guys. Oxy's going to continue to kind of just lose money on a basis as long as they're in this precarious debt situation. The problem is they're too big. They're too big to get sold off. I mean, really the only people that could come in and save a company like save them is really it's themselves. Do I think they're going to go under? No. Do they have an unmanageable debt situation? Yes, something's going to have to give here. So it'll be very interesting to see where Oxy goes. Continental Resources on Friday had their earnings call. I think the sentiment coming out of that is what's going to happen with Continental. They're one of the companies that are they going to merge, or are they going to go private? Well, I think going private's off the table. They're raising up to $1.5 billion in senior notes due in 2031 to pay off 2022 4.5 senior notes, 5% senior notes in 2022 and 4.5 senior notes in 2023. So as I mentioned, short-term capital raised to pay off short-term debt at the expense of long-term debt. This, to me, strikes as a move that they're eyeing to stay public and or merge with somebody versus Harold Hamm taking that thing all private himself. And remember, he does own about 70% of the stock, so he can really do whatever he wants. But that's what, when I saw this move this morning, that was the first thing I thought of is, now they're positioning themselves to whether they're going to be an acquirer, or get acquired to be interesting. I mean, they're, a Bakken pure player who I wouldn't say a pure player. They have some other operations, but the majority of their operations up there in the Bakken, they do make money. Is it? I don't think their operations are the best. I'm not a huge fan of at least their cash flow statement, but it's better than Oasis. It's better than some of these other companies that are pure Williston operators. So I think there's something interesting there. 1.5 billion in new debt. I think it's a manageable number. Gets them off the short-term hook. Street kind of liked the deal. Let's go ahead and take a look at the chart here. I like the deal. We'll see if the Street liked it. They did 1.6 percentage points on the upside. So getting rid of short-term debt always, hopefully will lead to a little bit of an increase in the equities market. Stu, are we missing anything today? Oh, yes,
Yeah.
we are. We're missing Ring Energy earnings. Well, first off, there's a little board tussle going on right there. There's a lot of activist investors going on right now. We ran a press release earlier this morning from two of the largest independent shareholders of Ring Energy. Looks like they're wanting a little more say into the board directors. As you know, 2 weeks ago, there was a private offering of about $18 million to a private investor who's now since put himself on the board. Our Ring Energy favorite president of ours, David Fowler, had to give a board seat. But there's some interesting stuff going on. Recommend you reading the press release there. They did release earnings today. Only lost about $6.5 million, which actually being a conventional Permian player, I can live with that number. I think the Street was reacting a little more to their top. They're down 6 percentage points. I think the Street is much more reacting to this shakeup in the board. If you're going to have your largest independent shareholder come out and basically say, we want an entire new board, that's not going to do well in the stock price. When you look at the earnings, though, I'll take it. I mean, that's a true net loss of $6.5 million for a pure Permian player, conventional right now. I'll take it. I mean, I wouldn't say that's thriving, but that's a survivable number right there. And so it'll be interesting to see how Ring goes from there. They started today, like I mentioned, about 58 cents down to about 54 cents. Now, Stu, did we miss anything?
No, you got it covered. But I want to ask you a personal question here, Michael. What is not good in the non-gap standards? You said when that other one you talked about is not good. Is that a non-gap standard?
Yeah, not good. It's what we would call non-gap.
Okay, just checking.
It's definitely a non-gap number. But I think this is really, I think, concludes earnings season for us. And if you're a follower of our long-term energy rants podcast that drops every Monday in the morning, we're going to probably next Monday cover the biggest, our biggest takeaways from this earnings season. I think there's a couple of them, one being ESG, cost savings. There's an article we ran on 360 yesterday about reducing LOEs and how that probably is going to be the big move of all of these companies trying to cost save. So highly recommend checking that out. But with that, guys, we're going to go and get out of here, let you get back to work, finish up your day. Thank you for checking us out here in the Energy News Beat, episode number 156. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow for another episode.